The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
So, it is Thursday today. The live program is Thursday. The rebroadcast is Friday and Saturday. But today is Thursday, the 7th day of December. This is the day that Franklin Roosevelt said would live in infamy. The 7th of December, this was the day on which Pearl Harbor was attacked. This was the day that got us into World War II. The day that will live in infamy. That was what Roosevelt said. Silver and Roberta Weinstein wrote a book called Pearl Harbor, Warning and Decision, in which they said it should not have been a surprise. It should not have been a surprise. Why? What went on? And what are the lessons to learn? I believe there's some lessons we can learn about what's going on in the world today and in the investing market today. But first, let's talk about what happened at Pearl Harbor. We knew already that Japan had expansion in mind. They'd moved into China. They were talking about moving into Southeast Asia. The fleet. We moved our fleet from San Diego. The main part of our fleet had been stationed in San Diego. And in response to what was going on in Japan and their expansion plans, we moved the fleet from San Diego to Hawaii. Now, the Japanese had a code they talked. It was a code we called Purple. And we'd been able to break that code. We understood exactly what was going on. We had broken 97% of the code. We knew what they were doing, where they were going, what their plans were, where their battle plans were. And so we knew their expansion plans. We knew what was going on with their Navy and with their armies. But in mid-November, suddenly there was total radio silence. Suddenly, this code that we broke, suddenly there was nothing. There was nothing going on at all. And the assumption was, by our military leaders, and our political leaders, the assumption was their Navy was close to home, that they were closing out the year and not going to be anything. But what that really meant is the entire fleet of the Japanese ships disappeared. Completely disappeared. You think if you watched Star Trek, that was the cloaking device. If you watched Harry Potter, that was the invisibility thing. They disappeared. That entire Navy disappeared. It was a concern, however, to the U.S. commanders, and the U.S. felt we needed to prepare. We moved the fleet to Pearl Harbor. And the big concern was that there was going to be sabotage. There were 80,000 Japanese nationals who lived in Hawaii. And the concern was it was going to be a lot of sabotage taking place in Pearl Harbor. Not just the military to be targeted, but the radio stations and the pineapple farms and the dairy farms that existed on Hawaii. So the response by the military was to line up all the planes, wingtip to wingtip, to get them all close together so it was easier to watch, harder to sabotage. They wanted the ships stem to bow so that there wasn't a lot of room for people to sabotage, to sneak and sabotage. And the feeling on the part of the military is that if Japan was really mobilizing, they were mobilizing to invade Russia or the UK, the United Kingdom territories like Hong Kong and those territories down in the Southeast Asia, they never believed, our military leaders didn't believe, our political leaders didn't believe, that Japan would ever view U.S. as inevitably getting into World War II. We didn't believe that the war had been going on. Germany had been invading countries, had been conquering countries. Japan had invaded China. They had taken over big portions of China, both very aggressive. Italy was on the move. But the United States, during that initial part of what would be World War II, was essentially inactive on a military role. And we felt, the military felt, the political leaders felt, that Japan wouldn't view the U.S. as inevitably being involved in that war. So what that really meant is our leaders were confusing the unfamiliar with the improbable. What was unfamiliar to them was confused with the improbable. They assumed what was going on with Japan was improbable. It was improbable. If Japan was going to do anything, they were going to invade Russia, or they were going to take over the UK territories. It was improbable that they would attack the U.S. They weren't really familiar. So you look at the Japanese fleet, and it was the size of 6 football fields. 6 football fields. That's pretty large. Think about Safeco, stacked end to end, 6-fold. We didn't have radio satellites. We didn't have reconnaissance flights. So that never went on. Today that all goes on, so we get to see where things are going. But that Japanese fleet sailed from Japan straight toward Alaska, and were on a straight line, and then made a 45-degree turn and headed to Hawaii, right through the blind spots of the U.S. They ran through those, and of course, we know on December the 7th, they attacked Pearl Harbor. We confused the unfamiliar with the improbable. We assumed improbable, but it was unfamiliar to us. Much of that, you can make a parallel thought about 2007. At that time, you heard again and again, the best investment you can make is your house. A lot of people felt that way, that buying a house was a safe investment. A lot of the foreclosures happened to people because they confused the unfamiliar with the improbable. It was improbable to have a crisis like 2008. We hadn't seen that since the 1930s. Economists would end up calling it the 70 years of the golden period from 2007 all the way back to 1930. It was a black swan event. It was random. Very, very few people saw it happening. The political leaders didn't see it happening. The business leaders didn't see it happening. The economists didn't see it was going to happen, but it happened. And now since 2009, we've been in a secular bull market. It's been going for now over 8 years, 8.5 years. We're coming up soon on 9 years that this market's been going on. And there's concern, just like the view of Japan in World War II, there's concern that this bull market will end like we ended in 2008. Bull markets don't end of old age. Even though this is 8 years old, almost 9 years old, that doesn't mean just because it's that long, it's going to come to an end. I've been talking on the radio station for 7 years about Dow 100,000. I think we probably reached Dow 100,000 before this bull market comes to an end. I think we have another number of years to go. When I started talking about Dow 100,000, the Dow was less than 8,000, and I seemed pretty crazy. Now we're at 24,000. It's not quite as crazy, just a little bit crazy maybe. That's, bull markets are born on pessimism, where everybody is so negative and things are going to go to zero and there's going to be blood in the streets. That's the pessimism they're born on. And they grow on skepticism. People say, it keeps going and going, and, it can't continue to go. We're getting old in the tooth now. We're 8 years old. We're 7 years old. They mature on optimism, and we're beginning to see the optimism that's coming, beginning to see people looking out for a continuation of the bull market. But they die on euphemism. They die when people begin to disregard what's going on. Think back to 2005 and 6. People had a very strong feeling everything was going forward. Didn't happen. We had excessive credit, not in the government, but in the banking system. We don't have excessive credit today. We don't have the buildup of credit that we saw then. So what will bring it to the end? I've talked about this before, going to revisit it again, but that's got to wait for the commercial break. We're coming to commercial break. You want to stick around and hear what I think is going to end it. You also want to hear about my guest. She has a great story to tell. And I want to talk about wages as well. Things are going on, things that will impact what's happening. Don't go away. We'll be right back after this commercial break, and we've got lots and lots to cover.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
Old.com.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
Welcome back. We've been talking about the day that lived in infamy, December the 7th, the invasion of the Japanese at Pearl Harbor, or the Japanese invading the U.S. at Pearl Harbor. It was a situation that we should have seen, we should have recognized, but we confused the unfamiliar with the improbable. And I believe that that's probably the way this secular bull market's going to end. That a lot of people will confuse the unfamiliar with the improbable. If you think about back, and I'm a believer that history doesn't repeat, but that it rhymes. If you think back about our parents' generation, the generation that was raised in the early part of the 1900s, the 1920s, the 1930s, the 1940s, it was a generation which went through the Great Depression. They experienced that. We got a taste of it with the Great Recession, but even at that, we didn't experience as long a period of time or as deep a period of time as the Great Depression. So as they came into power, they were willing to do whatever to make sure that we didn't get into a Great Depression. And so as the 70s rolled along, they were willing to inflate their way out of recessions to guarantee we wouldn't roll back into a Great Depression. And that was the generation that grew up during the time of inflation. And as that generation came into power, this this current generation that's come into power, they were willing to risk a depression to make sure that we didn't have inflation. You look at the central banks around the world, they have inflation targets, 2% or 2.5% or 1.5%, mostly around 2%. Targets to make sure that we don't get into an inflationary period of time. Raise interest rates to slow down the economy. Willing to make sure that we don't get into a recessionary, hyperinflation, stagflation time. But now the current generation, the younger people that have gone through, that are coming into power, they're the people that have gone through the Great Recession. And that is the imprint that's been left on them. And as they rise in power, as they come into power, I believe that the risk is not another repeat of 2008, 2009. The greatest probability is a buildup of inflation. If you look at what happened, people talk about inflation getting started in the 70s, started with OPEC, but that's not really what happened. In 1962, inflation was just 1% a year, and it increased a little bit, 63, 64, 65. It was all under 2%. In 66, it jumped above 2%, got up to 3. In 67, it was 3.1. 68, 4.2. 69, 5.5. 1970, 5.7. Do you begin to see the pattern that's going on here? We've had a period of time in 9 years where the inflation rate has gone from 1% to 6%. In 71, 72, we had a recession, and inflation dropped back to 4.4 and 3.2, and that confused the whole thing because people said, oh, well, we really don't have rising inflation. See, it's coming back down. Then came 73, 6.2, 74, 11, 75, 9, 76, we're getting under control. We got it to 5.8, and then 77 was 6.5, 78 was 7.6, 79, 11.3, 1980, 13.5%, 81, 10.3, and then we began to get into the decline. But notice, it didn't begin with OPEC. It didn't begin with the oil time. It didn't begin in the 70s. It really began in the 60s. And what was going on in the 60s? We had the end and part of a dramatically increasing stock market. We had, if you look back, I've talked about the super cycle, the study that was done by Standard Chartered Bank of the UK, talked about 3 periods of time in which worldwide growth has been higher than average. The first super cycle from 1870 to 1913, driven primarily by the industrialization of the U.S. From 1945 to 1970, you had the rebuilding of Europe after World War II. You had decolonization. You had the building of infrastructure in the U.S. You had all those things going on. And the third super cycle, they said, began in 2009. But going back to that period of time, 1945 to 1970, in 1940, the Dow stood at 100. And it would increase from 1940 to 1966 from 100 to 1,000. Actually to 999 point something, I don't remember exactly, but almost to 1,000. In 1966, it hit almost 1,000. Now think about that. Inflation had already begun to pick up 5 years before the market ended. It had already begun. But in 1966, the market hit 1,000 and then dropped 20%. It rose again to 1,000, dropped 30%, rose again to 1,000, dropped 40%, rose again to 1,000, dropped again 20%, and then in August of 1982 hit 1,000 again, and this time from August of 82 to 2000, rose from 1,000 to 10,000. So I've been talking about Dow 100,000 because I believe we're in that kind of secular bull market. But I also believe that we're starting to now see a pickup of inflation. Inflation's been benign. If you heard Janet Yellen's testimony, if you read about it, if you heard about other central banks, they're all concerned about a lack of inflation. In Japan, it's deflation that's been taking place. There's concern that as the economies of the world have gotten better and better, we're not seeing much inflation. We're going to come back to that and talk about that, because if you look at inflation, a rule of thumb makes it a lot simpler to talk about. But basically, inflation is driven by two factors. One is commodity prices, and that's about a third of inflation, and 2/3 are wage prices. We're going to be talking about that. As the economies of the world have gotten better, commodity prices have been on the rise. You know that oil prices dropped, steel prices dropped, aluminum prices dropped, iron ore, all those commodity prices took a big drop a few years ago. Now they're on the rise again. We're starting to see commodities increase, which tend to push up prices again. We'll talk about wages after I interview my guest. But I want to introduce my guest, Mary Burris of SysAdmin. Welcome to the program, Mary.
Hi. Well, thank you very much, Mike. Glad
So,
to be here.
why don't we start with your background?
Well, in the IT world, when I tried to figure out my career, there was no college degree or IT management degree. So I tried to do circuit board. I tried to do drafting because I wanted to do animation. And that's what they told me to do, is go do drafting. So I ended up working in a clone shop and building clones, and started not knowing anything. And they hired me on to teach WordPerfect, or WordStar back then, actually, way back. And eventually I worked my way into building computers and working on networks. And
I remember those times of WordPerfect
Yes.
and Word, and
Yes.
I thought when I got Word and a database program in a spreadsheet, I think I used Borland. I mean, I thought I've got all the computing power that I'll ever need in my lifetime.
With time, I did get some manufacturing certifications. I got my Microsoft MCSE, which I'm certified engineer, and I got my little trainings from different manufacturers, HP and Epson back then, and so.
So you've been in the computer world
in the trenches.
since then,
Yes.
from doing the hardware and the software.
Yep. Over 30 years. Yep.
You've seen tremendous amounts of change.
Oh yes, for sure.
So, and you started SysAdmin.
Yes.
When I first heard about SysAdmin, I thought it was SYS, but it's not SYS.
No, it's SIS admin. It actually stands for Sisters Administration Services. When I created the company, I wanted a short URL, and so it's a play on words on sysadmin, but it was also a play to get my sister to come join me on the company. And so she does still work for me. She does all the planning for our clients and projects. So yeah.
SysAdmin, SIS,
Actually stands
admin.
for Sisters Administration Services.
Interesting. So we're coming to a commercial break. So don't go away. We're going to get into talking about what SysAdmin does right after the commercial break. We've got a lot of things to cover, and I think you'll find this a really interesting story. It's one of those things that happens in the back room, so sometimes you're not aware of all the things that are going on, but it's also very, very crucial, and especially in these days where cybersecurity and data breaches and all these things are going on, and they're only increasing, not decreasing. We'll be talking about all of that as we come back after this commercial break. Don't go away. We will be talking about that, and we'll be talking about wages. We'll break.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
I'm here with Mary Burris of SysAdmin. So let's talk about SysAdmin. Tell us what SysAdmin does.
SysAdmin is officially called a managed service, IT managed service company. But most people don't necessarily know what that means. So I break it down to we are the IT department for our customers, and we help them think strategically about the growth and management of their network. We work with them to make sure that they've got a plan, and then we initiate it and keep them safe and make sure they're educated on what the new technology is, and keep their users happy and issues low. That's the goal, right? No issues.
No issues. So how do you do that? I mean, when you read about all these companies, and some sit on the information that they've had a breach, they'll sit on it for days or weeks or months.
Yeah.
So how do you
It's for us. Our strategy is a little bit of change all the time, right? So with the auditing that we do auditing monthly, and having that monthly allows us to take off little chunks at a time. And we find that we get a lot more done, a little bit more consistent budget for our customers, and a lot safer. Yeah, we've had in the past in our industry used to do an annual audit once a year, and sometimes the things would get done by the end of the year when the next time came around, and sometimes it wouldn't. But now it's like this new structure we have. It's we're just always taking one of the top three, and we're getting that done and putting goals for each quarter, and just like in any business, right? If you have that quarterly goal and you're really working towards getting that accomplished, you're more likely to get it done. And so that's what we do, and it ends up having great results for our customers.
And it seems it's really important. A few years ago, IT departments were considered just support departments. They furnished the information for the accounting, for the marketing, for the salespeople.
Yeah.
And so it seems like they got put on a lower level than most of the real functions. It didn't seem that they didn't create revenue.
Yeah. Well,
it was an expense, and so it was something that almost was minimized. And so when we read about all these breaches of data, you can almost see that this is something that was never that important to the company.
Yeah, I think the key is, a lot of people still think that IT support is just a help desk, right?
Yeah.
And that's just one little piece of what we do. It's like, we are your guidance to what solutions you should be looking at. We are your liaison to the other vendors in the IT department, making sure that we all mesh together making sure that we're talking to the leadership of the company to know what the goals for the whole company is, making sure that the security level matches what's important to that particular industry, because there's a huge wide range of security now. It's like all the way, up to, a guard at the door, and all the way to, a small mom and pop, they don't even want to change their passwords, So we guide them through what's right for your company. We have, there's, the whole team of really smart engineers implementing the bigger projects, and VCIOs, what we call is, each company has their own virtual chief information officer, which means they're the ones that are their strategists, really looking out for them.
So when you say you do an audit once every 3 months, what's composed in an audit?
An audit, we have all of the information that we've gathered out of our heads, out of, what's the industry standard. We even have some compliance stuff in there. And we've now got it into, we use a database so that it's not just in one person's head. And using this database allows us to say, how often do we want to ask that question, right? So we actually go out monthly, and we do a piece of the audit every month. But then we gather the data quarterly, and that's when we have our conversations with the clients. But having it this way allows us to get all the minute details, like if there's conflicts between different applications, we can save that information. And if we get a new client that has that app, we don't have to remember that, 2 years ago we fixed this app issue before. We have it in our database that says, if you have this app, make sure this fix is in place. So that helps us to be even more proactive than some of the other providers out there. We don't lose, we would be able to retain that knowledge and information and reuse it over and over again. Our goal is to never, like I said, never to have that user issue, right? And if we can remember and implement all those fixes and have the best practices put in place, help our clients understand where they're at in the level of security, and say, okay, this is the level where you want to be. This is the level where you're at, and these are the, we're going to get you there, but it's going to be a process. We're not going to try to do it overnight unless you actually have to, but most clients, they just want to know that they're on that path, that we're taking care of it, we're moving in that direction. And it's a moving target, right? Because
it is a moving target.
It's not the same. That target I said, last month is a new target today. So our database is constantly moving and changing.
And we have a cybersecurity policy that every 6 months has to be updated because of things that are changing. It's a fast-changing world.
Mm-hmm. Yeah.
So let's talk a little bit about the cloud.
Yes.
There's been a lot of information. A lot of people talk about the cloud. When does a company need to be in the cloud? When do they not need to be in the cloud?
Yeah. Quite often, especially when I get new customers, they say, we want to go to the cloud. And I've learned through many conversations that most of the time they don't really know what that means. So I have to start from scratch and say, okay, what do you understand about the cloud? And I educate them on what are the different ways you can go to the cloud. And then we always start with back to our audit, right? Because I have to understand their business. I have to understand what their structure is, what they have, what software they're using. And then we take that and we start looking at the different ways that are appropriate for them to go to the cloud. Because you can go to the cloud as far as, your vendors have hosted, right? Like Office 365, that's a hosted solution. You can go to the cloud by having hosted servers. So that's like Amazon and Azure. You can also actually have your servers, your hardware servers, co-located at another location. I mean, there's lots of different ways of structuring it, and within those, there's lots of different choices, right? So I usually start with in that order, right? It's like, what apps can go to the cloud? Are they thought about 365 or a hosted email solution? Have they looked at their main business app? Is there a hosted solution? Is it practical for them? And then we go look at I lost my train of thought.
I want to ask, because we got to wrap this segment up.
Yeah.
I want to ask, what size of company are you looking for? What is typical of your company?
Okay. We serve typically around 20 to 100 users. That's our target. Typically, because once you hit 20 users, you have a higher need for the full managed service that we provide. Anything over 100 tends to be a point of contact where there's somebody in-house too as well.
So if somebody wanted to have you do a review, have you come in and be their IT department, how would they contact you?
We have a website at sisadmin.com, and we also have a phone number at 425-482-1919.
Great. Thank you for being on the program. It's an important aspect. It's becoming more and more and more and more and more important. Don't go away. We're going to come right back after this to talk about wages. So keep right here. Don't go away.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and, probably most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today 206-903-1019 or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So, I started saying at the beginning of the program, we're rebuilding our website. We've been cyber attacked, and I can say AFC, Adams Financial Concepts, has not had any customer compromised. When you think about that, Experian had hundreds of millions of people that were hacked. Yahoo, Uber, Sony, and the result is that hundreds of millions of records are picked up. People pick up Social Security numbers, addresses, phone numbers, email addresses. IDs are stolen, personal ID theft. It's a big thing. One thing I did not realize until I went to a cybersecurity workshop was that you can buy a stolen credit card with the number, the expiration, and the thing on the back, you can buy that on the internet for $13. You want to buy 100 of them? You can buy 100, $13 a pop. You know, almost nothing is impossible for people to get to. I went to a Fidelity conference, and they described one guy, or maybe it's an entire group. No one's really sure. But they were making about $30 million a year from hacking into clients' accounts. And the way it went was like this. They would hack into somebody's computer. They would get the phone number, and then they would get their account information. They would send an email to Fidelity saying they wanted to send funds, part of the account, to a third party, an offshore bank, maybe to Malaysia. They wanted to send it wasn't a significant amount. It was maybe 20% of the account or 15% of the account. So if it was 100% of the account, that would show up really in a big way. But it was a portion of the account. They wanted to send that off. And for a big account, Fidelity has people that are there that will take the information and they'll call the client to verify that the client actually requested the transfer of funds. This group hacks into the phone and they do call forwarding so that when the Fidelity person called, they reached the hacker who said, of course, he ordered the transfer. So the funds are transferred to somewhere overseas, for example, Malaysia, which is way after hours in Malaysia. So it goes into the bank. There's no human there. And an order is given to the bank there to transfer the funds from Malaysia to somewhere else. And it also a place where the bank is closed for the day. Then it's transferred to another bank, to another bank, to another bank until eventually it just disappears. You know, that was a significant person and really on everybody's radar. But, you know, when you look at it, they're also focusing on smaller accounts as well. When I was at a compliance conference 2 years ago, one of the SEC presenters, Securities and Exchange Commission enforcement people presenting, asked how many firms had been hacked. And it was all the compliance people who should know. And about half of us raised our hands. I've been hacked. I know. And he said, the reality is the other half who didn't raise your hands, you've been hacked. You just don't know. You know, they used to ask people, have you been hacked? And very few would say yes. Now it's almost everyone is hacked. Everyone's had a cyber attack. It's only a matter of how many and how successful. Willie Sutton was a bank robber. And they used to ask Willie Sutton, why did he rob banks? And he said, I rob banks because that's where the money is. You know, the hackers focus on banks and brokerage houses because, like Willie Sutton, they know that that's where the money is. And don't you find it absolutely amazing when firms find out that they've been hacked, data's been breached, but the management sits on the information for days or weeks or months? In some cases, over a year. That really bothers me when I think about that. I said that Adams Financial Concepts had been hacked. We detected within minutes that we'd been hacked and immediately began to take action. At that time, I was with Fidelity as a custodian, and I've now moved to Interactive Brokers, and I'll tell you why in a bit and explain why. We're much safer at Interactive Brokers, but we were at Fidelity at the time, and what we did is we immediately notified Fidelity that we'd been hacked. We wanted no funds dispersed from any client account unless I personally authorized it myself. I wanted to assure that there had been no funds sent out from the time in which we assumed that the hack was made and the time that I made the call, which was only a few minutes. And no funds had gone out. The second thing is I asked Fidelity to change every account number so that every client had a different account number. So even if the hackers had hacked information and obtained account numbers, those numbers would all be bogus by the time we were finished. Fidelity wasn't really excited about going through that effort, but after a while, maybe a couple hours, they began to change the account numbers, and within 2 days, every client had a new account number. At the same time, we made an all-out effort with everybody, all the employees at Adams Financial Concepts, calling clients to let them know we'd been hacked. We asked them to make sure that they cleaned their computers and to be sure that nothing was hacked into their computers. We recommended they actually clean, and we recommended that they let us know if there were any problems with their identification. We told them as well that any disbursements would have to come through me. So I would verify any disbursements. They could let me know if they were going to take money out of the account. But for a period of several months, I had to personally authorize every single disbursement that was made. The impact of all that was no money was lost. To the best of our knowledge, we had no client whose identity was stolen. And we've gone since 2009 without a breach. We're frequently attacked. We have the name financial in our name, so we know that we're attacked. We know that that happens, and we know that people hack our website. Our website is completely independent from our client information. So people could hack into the website, have a complete control of the website. They'd never find out. There's no client information at all. If you think about how most firms operate, you go to their website, and it's from their website that you go into your account, not at Adams Financial Concepts. There's no connection. But we've been hacked, and we went to Interactive Brokers in 2010. Our hack with Fidelity was 2009. And we did it for a number of really good reasons. But we're in the process of rebuilding our website. We're not going to have client information on the website. We're not going to have anybody that can access client information on the website. The website is simply for information purposes, to put blogs, to put our performance, and to let you know about the radio programs and what we're doing. It's not going to have any client information. Interactive Brokers has double authentication. It has much safer access than we had at Fidelity. And I run out of timer, so I can't tell you exactly what it is. We'll have to visit that another time. But until next week, have a very good weekend, and I will be back next week to talk more about money.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com. The following programs